Hello, I'm Jonathan Hewlett, Head of London Residential at Savills. Welcome to the 4th edition of World in London. As I'm sure you know, London was in the global spotlight last year with the 2012 Olympics and the Queen's Diamond Jubilee. This all served to raise London's profile even further on the international stage. This publication gives you an insight into the property market across London, including who's buying where and what effect it's having on values. We've seen a really positive start to the year and we expect a period of stable growth to continue. But here's Yolanda Barnes, our Director of World Research, to tell you more.
We hear a lot in the press about lights out London, properties bought by wealthy overseas buyers and left empty. Is this a myth or reality? Is it true that ordinary Londoners are being priced out of the capital's housing markets as a result of an influx of wealthy overseas buyers? Our latest World in London report provides researched information about the whole prime market, some 32,000 sales last year, both newly built and pre-used stock, which puts this all into proportion. It busts the myth that vast swathes of London are falling prey to buy-to-leave investors. Instead, it paints a picture of a market dominated by those who live, work and study in London. 93% of all buyers have an occupation or business interest in the UK. Most have a considerable stake in this very cosmopolitan city. To put the market in context, the majority, 54%, of buyers in prime London are from the UK. Most of the prime market, which saw about 32,000 transactions in 2012, is resales or second-hand stock. 38% of this stock is bought by international purchasers. 65% of those are buying their main home. This reflects the fact that London is a major global city and many of its residents have come from overseas to live, work, study and do business here. The new build market is only 22% of the whole prime market, or some 5,000 sales. A high proportion of new home buyers are international, reflecting very active marketing by UK developers overseas. But even then, over a quarter are buying their main home, and many of them make that purchase in the UK. Most, 58% of new build international buyers, are investors and will let the property. We estimate that last year they added around 3,000 much needed homes for market renting to London's housing stock. But this is still only 9% of the whole prime market. A tiny 2% of the market is international buyers purchasing newly built second homes. These will have lower occupancy levels than main residences, but only a very small proportion even of these will be left empty. We estimate fewer than 300 last year. This is a problem if they are all concentrated in one development, but not a major issue in the context of the 97,000 transactions that took place in Greater London over the 12 months to April 2013. Meanwhile, the reservation of new homes in advance of completion, the so-called off-plan sales, both at home and abroad, is a very important source of funding for developers. Without these sales, some schemes would not be fundable or viable, so would risk not being built. We estimate that around 3,000 affordable units were delivered last year on schemes part funded by international buyers. Without these buyers, some would not have been built. So how are international buyers affecting London's real estate markets? And how is overseas demand changing the nature of London's housing stock? Our World in London report details how different nationalities behave and how they are influenced by what is happening in their home markets. We detail these latest trends. We look at who buys what, where, and assess how markets will move in future as a result. In conclusion then, are international buyers driving up London's house prices? No. It's the strength of London's global economy and short supply of housing stock that has attracted large amounts of equity into the market since 2006. We estimate that £15 billion of this equity has come from bonuses paid in London from the financial services sector. Some of this is paid to its international residents, but not all. Despite the contraction of corporate banking and jobs based in the city, there has been quite a revolution in London's finance. There's been a shift from corporate wealth based in the City of London to private wealth based in the West End. Private banking, sovereign wealth and family offices have generated the wealth that flows into London's prime markets. This is a consequence of London's global city standing, but cannot be put solely down to global buyers. Much of it has flowed into the domestic markets of southwest London, for example. Overall, price rises have been uniformly strong across the whole prime area, regardless of whether markets have a high proportion of international buyers in them or not. This growth has been moderately strong, but also exceptionally stable since 2009. We anticipate that London's preeminence as a world city will continue to attract large numbers of people from overseas wanting to live in the city, and also large numbers wanting to invest. London is Europe's fastest growing city and due to enjoy population growth of around 1 million people in the next decade. The strength of the economy of this city-state will continue to attract capital and build on the estimated £37 billion that we think has flowed into prime London markets from overseas since 2006. This flow of wealth is a very important driver of London's house building programme and of regeneration. It will ensure that a large majority of the 400,000 homes that London needs over the next 10 years will actually be built.